Let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Now today we are on 20th of May, Friday. On Monday, 16th of May, I given the forecast for this week, 16th to 20th of May. And today on 20th of May, between 5 and 5:30 GMT, I am going to review the forecast, what I have given it, the session-wise forecast, which I gave for Monday to Friday, all the 3 sessions of the day, and also the range in which the currencies are expected to swing. So those ranges also, I updated with regard to the low set for the week and the high set so far. So with which we will be in a position to understand how far we will be able to follow the forecast and try to plan some trades to earn money from the other market. And those who are interested to contact me and get more details can contact me through email, dr@iknowindices.com, i-knowindices.com. And if you want to contact me through Skype chat, then iknowindices@hotmail.com is my Skype chat ID. Then you can also visit my website, i-knowindices.com, and it is there since 1999, and you can find out the archives and also the forecast what have been given in the past years in order to find out the reliability of the forecast model. Let me go to the components of the market reading, my trading system. So I follow the derived forecast, which is a specific type of algorithm, statistically derived algorithm is being used in order to derive the market moves. And the speciality of my forecast, it also gives the time frame. It is not merely the market will go up or come down and it's reaching the support or reaching the resistance, etc. Instead, each session and each 30 minutes of time frame, what sort of moves we could see it in the market, and that is being given by my algorithm. In order to fine-tune it, I also do the market reading. So the live market analysis of using the initial lows and the highs and see how exactly the players are making the moves in the market and whether they are just making a move above that of the initial high or below that of the initial low, and try to follow the time frame they take for such moves in order to predict the next move they are going to do it. So accordingly, we will be in a position to take decisive position and earn money from the market. So there is no ambiguity associated with the market reading. And I'll be giving soon from June, Tracking the Forex Market Together webinar. This time it is going to be of a different nature. That is what we are planning. So I will try to take the position and show you how exactly the market is moving in line with that of the expectations of our market reading, so that we will be able to really see how exactly the market reading has to be done, so that we will be in a position to do fearless trades. Then, in the event if the market goes against, we don't go in for a crisis management, and suddenly if there is a drop in the market and when we are having a buy position, we don't become panic because we use the hedge order to limit the risk. So we use the hedge order to limit the risk, and that can be that I am going to explain it, the trading strategy during Tracking the Forex Market Together webinar. And also I had done it in the earlier webinars. They are recorded and they are displayed in fxtrade.com. There you can get the details also. This time I'm going to do it in a modified way so that you'll be able to really track along with me for a prolonged period, and then we'll be able to see how successfully we'll be able to do the trades. Now this is the forecast I had given it on Monday. They are expected to make the swing and rise and also the slide till Tuesday and then start gaining the levels. What they have done in the market is that they gained continuously the levels in the case of JBB, and then slowly they made the drop in the case of Euro. And so after making a drop, we are able to understand they are making contrarian move in the case of Euro GBP. That means they are handling the European crosses. Now we can find that they are handling the European crosses for the start of the day. That now you find that Euro is in positive net change and USD CHF is also in positive net change. Euro is in positive net change and GBP is in negative net change. That gives a clear indication that they are handling the European crosses. Now earlier on the previous days, we have seen that USD CAD was gaining and Australian dollar was dropping. And that way, they have been doing the USD gaining move. But today, if you see that they are doing the opposite of it, that is USD CAD is showing negative net change, Australian dollar is showing positive net change. So this is how they handle the crosses to start with when there is a low volume in the market without breaching the initial high or the low. And later on, they come to that of the majors. Today being Friday, they are expected to make the swing and rise during that of the Japanese session and then firm up during that of the European session and then quickly gain the levels in the case of US during US session. And you will be able to see that Euro GBP as well as USD yen and USD CHF, they are expected to gain the levels as a contrarian move. That way the respective crosses will also go up. Both the yen crosses as well as the European crosses, they are expected to gain the levels when the players make such contrarian moves. And in the case of the commodity crosses, they are expected to make the commodities stronger. As a result, you will find that USD CAD is expected to make further drop and Australian dollar is expected to gain more during that of the day. So what we need to understand here is whenever the session-wise forecasts are given, you try to take the position during start of the session and the timings are given here and try to close within the session. Unless and otherwise there is a continuous gain expected, don't try to hold the position for a prolonged period. And also, once the position makes profit after taking a buy position, if the position is making profit of 15-20 pips, try to keep stop at entry so that when they continue to gain, you will be able to maximize the profit and at the same time, you will avoid the risk. So along with that of the trading, try to apply the simple trading strategy simultaneously so that you don't get the market fear. Even if they hit the stop at entry in your buy position and then again they try to show a slightly lower level, you can buy it at a better level and keep the hedge order to limit the risk. And once they start gaining, you can keep stop at entry and wait for the quick gain. So that way, if you try to do it, you'll be able to really maximize the profit. Because if you don't use the trading strategy, then you are put under pressure when they suddenly make a quick knee-jerk reactions in the market. And the players are known to make knee-jerk reactions in the market from time to time in order to make the traders to go in for any distress trade. See, KB has got a remark here that the slide is missing. I don't know what is the problem. Hope the slide is visible for everybody. Hope there is no technical problem associated with it. So today they are expected to gain more levels. Yeah, okay, thank you. They are expected to gain more levels in the market, and also they will continue to make more gain levels in the case of Euro and GBP as well as USD and USD CHF in next week also. So the next week again you will come across the upward trending move in the market to happen. Now these are all the levels I have given it, the market to gain or swing during this particular week. In the case of euro, 1.13 was estimated as a mathematically lower level, but they came down closer to 1.12 or slightly lower and then started gaining to 1.12. They are expected to gain more levels above 1.1349 today and use some SQs and then start gaining bigger levels. And in the case of GBP, from that 1.43 level, they have gone up to 1.4663 and holding it. And today they are expected to squeeze upward, inducing all short covering from the other traders. And in the case of yen, you have seen that from 1.108 level, they've gone to 110 and they are expected to gain further levels to 111 during this particular day. So you can understand how they gained the levels in the case of JBV as well as USD yen. Many people are not in a position to understand why such moves happen in the market. The players make such moves in order to gain more levels in the case of the respective crosses like GBV and Euro yen, etc. So they gain more levels by that way. So we need to understand what they are doing it with the help of the net change, whether they are making the USD gaining move or USD weakening move or a contrarian move. So whenever they are making massive moves, then you will come across either it will be USD gaining or USD weakening. But whenever they are making subdued moves or a net change of 30, 40 pips or 60 pips like that, then they will try to make the contrarian move in order to make the quick swings in the case of their respective crosses. By looking into it, you can understand what cross they are handling. Accordingly, you can take positions in those crosses that will give you a real profit. So, in the case of USD CHF from 0.97, they've gone to 99 level and they are expected to breach parity for weekend. Then in the case of USD CAD from 1.28, they've gone to 1.3155 and returning it. So you can understand how these estimated levels are being respected in most of the cases. Then in the case of Australian dollar, they just breached low and gone below that of 0.72 as a downward extended stop and started gaining. And they gained the levels initially. From there, they dropped it and they are expected to gain level and make upward shift in trading zone in the case of Australian dollar. And you see, in the case of Australian dollar, they keep visiting the low mainly when they are gaining levels in the case of Euro and GBP, corresponding gains will not come across in the case of Australian dollar. Then in that case, it will go above parity. So in order to avoid it, what the players do it, when Euro and GBP are gaining more levels, they just make downward move in the case of Australian dollar and then again start gaining. So that when Euro gains to 1.17 or GBP to 1.50, Australian dollar will be around 0.77 or 78. Then you will be wondering, see, it went up to 0.78 and from there it dropped and again it is going back. So this is how they try to make the moves in the case of Australian dollar. So in the case of Canadian dollar also, every day they make the either way stop-ins. So you have to understand the behavior of the players as far as the corresponding currencies are concerned. In the case of denominator currencies like USD yen and USD CHF, they make the one-sided move. That is, they gain and rest a little bit. And then again gain, rest a little bit. And they don't retrace it. But in the case of Euro and GBP, they retrace and then gain, retrace and gain. So that sort of moves they do it. All these type of moves vary depending upon the volume they envisage in the market. Okay. Now coming to that of the market reading. So these are all the initial lows and the highs I noted down today on Friday. 1.1197 is the low, 1.1210 is the high in the case of euro. They are not breached the low or the high. And in the case of GBP, 45.94 was the initial low. They came down to 45.92 and holding. So they just breached the low by 2 pips and they are holding it without making much of a drop. They are holding it for more than 30 minutes. It is nothing but an extended move on the downside for a brief 1 pip. And then they will make the intentional move on the upside. So this they make it in order to induce the traders to book profit. Those who have taken their buy position to book profit, and also induce them to go in short. Because somebody will say that GBP is not able to breach above 1.46. So, and some may say that head and shoulder formation has formed. So it has gone to 1.4662 and then again it is not able to breach above 1.46. So they are all sell levels. So when the traders take sell position, the players are expected to gain more levels, induce them to do the short covering. So always keep in mind the players make the market appear respecting technicals and fundamentals from time to time and breach the expectations. And then people will say, no, technical is breached because of fundamental, or the fundamental is breached because of technicals. So ultimately, what happens? Those who blindly follow it, they are forced to cut the positions. This is how the players earn money from the other market. Then USD and 109.85 is the low, 110.09 was the high. They breached the high and went up to 15 and then come down below. So they are making a consolidation here and slowly they are expected to gain the levels during the day. USD CHF 99.05 is the low, 99.15 is the high. They just breached the high and staying above. It clearly shows that USD CHF, they wanted to make an upward squeeze. Then in the case of Canadian dollar, 1.3077 is the low, 1.3100 is the high. They are not breached the low or the high. Again, in the case of Australian dollar, the lows and the highs are not breached. So they are handling only specific pairs like GBP on the downside and yen on the upside and CHF on the upside. They are done briefly, the breaching of the lows and the highs, and slowly they will increase the spread. You wait for the spread to become more than 40 pips between the high and the low, and then commit position so that you'll be able to really read their intentions and trade easily without any market fear. And then your reading will be perfect. Now, here are the recommended trades. In the case of euro, I kept, sorry. $1.1200 and 1.1230 is the exit level, 1.1170 is the hedge order level. So once it has come closer to that and they could give a definite fill. Okay. In the case of JPP, 1.4594 I kept at the buy. So they just filled it. It has become a position and a exit order at 1.4624 and the hedge order at 1.4564. So that when they drop, for example, then immediately I will be hedged with 30 pips of money is being blocked. Then what happens? I watch for about 10 to 30 minutes. And in that process, if the hedging is not making profit after 10 minutes, I just close the position with 1 or 2 pip loss and keep another hedge order 30 pips below the market. Then once they start gaining the level, then I trail the hedge order upward to that of the original level. Until the market goes above my buy position, I keep the hedge order. Once the market goes above my buy position, about 20-25 pips, I keep stop at entry here and remove the hedge order. So the hedging is used to limit the risk. And then once they start gaining more levels, I use the trailing stop of 15 pips away from the market and move the hedge order, move the take profit order also away. That way, I try to maximize the profit. In the event if the hedging is making profit for more than 30 minutes, then I understand that they are making a quick opposite move to me. And then I keep stop at entry in the hedge, wait for the market to form the new low. And also I try to read whether it is an extended move or intentional move. Accordingly, I book profit at the hedge side, keep another hedge order to limit the risk. And once they make the opposite move, I'll be in a position to trail the hedge order upward and try to book profit on the buy side also. So that way, I'll be doing either way trades to make money on either way moves of the market. So try to understand the trading strategies are the one which are going to give you consistent profit from that of the market. In the case of yen, again, I kept near that of the low a buy order, which is still a limit order, and they are not filled it. Well, these are all the market timings. Always keep in mind, early and the late sessions, they handle the majors, mid sessions, they handle the crosses. And in between, you come across, between the sessions, you come across the gap time. And gap time, they make the false moves in the market. So opposite to that of the move, they are going to do it during the session. So that will indicate, suppose during the gap time, they drop euro, then it clearly shows that they are making a downward stop and during gap time in order to make gain levels during that of the US session. So that way you can follow the gap time move and take the position accordingly. If they drop buy, if they rise, you take sell, then you will find the opposite move happens during that of the following session, and you will be able to quickly book profit during that session. So read the intentions of the players, then you will find trading becomes a child's play. So if there are any questions, you can ask me. I'll answer those questions in the chat window. And I'll come back on Monday and give you the forecast for the next week. Now, Hassan has got a question. How do you see gold moving from this level? Gold is expected to gain the levels following the gains in the case of euro and GBP. Any other question? Okay, if there are no questions, then I'll try to show you the forecast. This is the expected market move on 20th of May. Then the initial. And how is the euro GBP is expected to go? Euro GBP, they made that drop because they gained more in the case of GBP, the denominator in the euro GBP cross, and euro they dropped it. Because of that, euro GBP has dropped. The numerator is euro in euro GBP. So when it has dropped, and automatically euro GBP drops. Besides, GBP becomes stronger. The denominator, when it becomes stronger, also it will make further drop. So they have made a big drop in the case of euro GBP, and they wanted to gain the levels now from today onwards. And Monday onwards, you will come across euro to gain more levels when compared to GBP. That is how they handle it. So these are all the expected market moves, and also the levels in which the currencies are expected to swing in this week. And the initial lows and the highs noted down around 3:30 GMT. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. And for those of you who attended the webinar, so that you are able to understand how the market is manipulated, how you can get rid of the market fear and try to earn consistently from that of the market as a small trader. And I wish you all happy trading and see you on Monday. And I will come up with the forecast for the next week. So wish you all happy trading. See you on Monday.